Are you wondering how to invest in rental properties to avoid the mistakes of inexperienced investors? Well, that's exactly what we're talking about today, because there are some little things that really make a difference in whether you have fast success or run into a loss with real estate investing. And it all boils down to one big principle that we are going to break down. Myself, Jill Gockel, and my guest speaker, Jeff Barlow, who happens to be my dad and an expert in real estate investing. So make sure to subscribe to this channel and hit the bell so you get notified when next week we drop a new real estate investing video. So what's the big difference in successful real estate investors and those who lose a lot of money when it comes to buying rental properties? That's really going to come down to your motive of why you are purchasing properties. And you must get this under control in order to have success and make sure that you are always operating with a positive cash flow, making passive income, and avoiding the pitfalls of inexperienced real estate investors.
Look, Jill, most of the investors, when they're going out there, they are going with the mindset that there just isn't enough properties. They're going really fast. And our economy that we're having today, it is only accentuating that mindset. It is, properties are coming on and they're being bought up literally the moment that they're hitting the market. And many of those are being way overpriced and paid way too much for it. So the real key to this is having patience. Don't be in a hurry. This economy that we're in right now isn't going to last that long. So if you're jumping in because you're afraid you're going to miss out, you're afraid that somebody else is going to get the deal, then you're gambling. You're not investing. And when you're gambling, you're putting all of your stakes into a market and into an investment that you could lose really big time, especially if you are buying these on with loans. If you don't do it right, the value of the house is going to market change and could crash. I'm really looking at, the way that the market is going right now, that's like it was back in about 2004. 2004, 2005, 2006, man, the housing market was just going nuts. And that's what it's doing today. And many of these properties were, 2 to 3 to 4 times more expensive than what in 2008 when it crashed went down. So a house that was selling for $70,000 turned out to be $20,000 after the crash that hit, the market adjustment.
So one of the really interesting things about what he is talking about is when you come into the mindset of scarcity, of I have to get a property, I want to invest, I got to get something, and I got to get it before the next investor comes and takes it out from under me. What you're actually doing, like Dad said, you are gambling, but you are buying with emotions. You're doing emotional buying. And those of us, especially you ladies, emotional buying always leads to bad decisions. You almost always overpay when it comes to doing emotional purchases. And so what you need to understand, as whether you're a new investor or maybe you're an experienced one, but you're getting caught up in what our economy is doing right now, you must remember that you absolutely cannot be buying based on your emotions. If you're feeling scarcity, if you're feeling anxiety that you've got to hurry up and get the property before the next investor, you're emotionally buying. But instead, what you need to do is you need to buy out of logic and knowledge. Logic and knowledge are going to be key for making sure that you don't overpay on a property and that you are getting a property that's really going to grow over the years, grow your portfolio, grow your passive income so that you can hit financial freedom or retirement or whatever type of goal that you are trying to achieve. You've got to get the emotions out of it and lean into the knowledge and the analysis of the properties that you're looking at.
Not all economies and locations and market are the same. So while, one location may be just going nuts in how it's growing, there could be another one that is really giving you the cash cow properties that you're after. So instead of just staying locked into the area that you're most comfortable with, you want to look and expand and find areas that you may not be comfortable in that market right at the moment, but you're seeing that it has opportunities that could meet the cash cow type properties that you're wanting and that we can teach you how to do. The but what it will require is learning how to create teams that will help you. And it will, how do you find them? How do you validate them? And how do you make sure that you are making the best deal? This again goes back into patience. There are abundance of properties that are out there. You just need to know how to look for them and how to find them.
And one of the things that I really want to touch on that Dad mentioned is that if the area that you're purchasing in right now is no longer really having a lot of beneficial or profitable properties, you see maybe the prices are going up, but the rent is not matching that. And so now these properties are not as desirable to an investor. Then, like he said, you need to start looking around into other areas. And so that was something that we personally, my husband and I, ran into was when we first got into real estate investing, and we paid a lot of money to get a lot of education from the experts that are out there. We came back to our home area where we wanted to invest locally. It was a college market. There's everybody we knew was doing rental properties there. So we thought, of course, this has to be the area that has amazing profitable properties. And what we found was that that was not the case. The people that we knew who were investing in our area were investing for tax breaks, not for cash flow. They were investing for appreciation to be able to sell the property later at a profit, which is not guaranteed. It's not guaranteed at all. Then instead of being able to purchase the property and make a profit right off the bat because the cash flow was so high, your return on investment was high. And so what we had to do was we had to start looking non-locally. So we had to step outside of our comfort zone, start looking in areas that were not local to us. And as Dad mentioned, that we started putting together a team that would be able to help. If you listen to our prior video talking about the lies of MLS, our team helped ensure that we did not fall prey to the lies of the MLS listing. We were able to go in and evaluate a property properly to make sure that it was a good investment and there weren't any hidden costs in there. And make sure that you're subscribed so that you catch the upcoming video where we are going to be discussing some of the hidden costs that new investors overlook.
So one thing that I do want to say, as you are looking at other markets, if your cash cow properties market is dried up and become really an exaggerated market, and you find another area for cash cow, don't lose the don't lose sight of where you were at, because there will be a market correction that will come along. And when that happens, you'll probably move right back into the area that you already have a team, and you have your team still looking that's there. You're not throwing the baby out with the dirty water. You are really keeping track and being a competent and an educated investor that is looking at how to buy the best rental investments that are out there, and understand it's an investment. It's no difference than if you invest in stock. It's just a more reliable market.
Now, you've heard Dad mention a few times cash cow properties, and just to give you an understanding of what that is, a cash cow investment or a cash cow rental property is one that you can buy at a low purchase price, but you're still getting a high rent. We have a lot of other competitors or people that we know who are purchasing real estate investments that they are going in and they're spending at least double what we pay for a property to still get the same monthly rent. And so that's where we're coming in and we're saying, okay, the types of properties that we invest in and that we teach our students to invest in is the cash cow. We want to make sure that your rate return on investment is going to be really profitable to you. And so if you would like to learn more about that, we have a free download that gives a checklist of what we call our cash cow property funnel. And it explains in there the key elements that you need to cover in order to be able to find a property that is performing like a cash cow and not one that has maybe a high purchase price and a low rent, or a low purchase price and a low rent. You want to make sure it is low purchase price, high rent, so that you are increasing your passive income and doubling your speed of growing your portfolio. So you can find that link in the description below. And if you liked this video, please let us know by clicking the like button, subscribing, sharing it with a friend, and make sure to leave a comment and let us know if you found this video helpful.